Live streaming is on.
All right, guys, we're going to go ahead and get started. Hopefully you can see me on the screen. Hopefully you can hear me loud and clear. Welcome to our HFX Master Skill Training. This is your host, Brandon Boyd. Super excited to be on the call today. The call is being recorded. I'm going to show you here in just a second where and how to actually get access to it. Why don't you go ahead in the channel, put where you guys are calling in from. I know we have people from all over the globe who are on our calls each and every day. We appreciate you for being here. I also want to welcome all the new members of I Am Mastery Academy. If you've joined in the last 7 days, put new, N-E-W. Guys, let's go ahead and welcome them to I Am Mastery Academy. You've made the right decision. And the purpose of these sessions is to help people really learn how to master the skill. I want to say up front, it's not just to call out market ideas or trades or signals, whatever everybody wants to call them, but really to teach you how to actually do this. And that's really where the power comes in for you guys to really make money long term, is not just to receive trades like you would receive fish, but to actually learn how to fish. And that's why we have these sessions. So I want to welcome all the new members again. We gave recognition as well yesterday. So thank you to everybody out there who submitted the information for the flyers. We appreciate you guys and are just super proud of all the Club 50 and Club 100 members. Again, the email is jbboyd25@gmail.com. Please share that with your teams. It's a win rate of 70% or above on 50 consecutive trades, or 70% and above on 100 consecutive trades, okay? We don't care if it takes you a day, 2 days, a week, or a month. However long it takes you to reach that mark, that benchmark of 50 or 100, we want to recognize you every Friday. So it's jbboyd25@gmail.com. It's your name, clear photo of yourself, and then put in the email the number of wins, losses, and win rate percentage, okay? Very important. We would just want to see proof of the trades, but give us those numbers as well. That way we can verify it. So send that information when you can. I do want to mention as well, for anyone who's on Instagram, the only account that I have on there is one account, Brandon Boyd Official. It's one that has 47,700 followers. Any other account's a fake account. I have one account. Make sure that if you see those other accounts with my name, that you actually report and block those accounts. Mine has 47,700 followers, Brandon Boyd Official. Now, I'm going to do a share screen with you guys here real quick as we get started here. Take myself off the camera. If at any time you cannot see my screen, let me know. One of the services that we have that has a strategy inside of it that we use a lot is called Cash Trap. The actual service is Hourglass. The strategy inside of it is called Cash Trap. What you're going to notice here is that every 5 minutes it gives an up or down arrow, a call or a put. And on the right, this is what's called an alert panel, which is basically going to tell you every 5 minutes of a new trade opportunity that pops up. So because we train on this so often, I want to recommend to you, if you haven't already, you can go in your back office and under the menu tab, scroll down to where it says shopping cart. Under shopping cart, you can add Hourglass. 73 cents a day, $22 a month, no contract, is month to month. Try it out for a month. If you like it, great. If not, turn it off. We don't actually get paid any money for those subscriptions. It's just we recommend it because it is an add-on. It is the #1 use scanner in HFX. And so because we train out so often, we do recommend you guys get that, all right? Now, part of our service with Go Live, obviously you guys are on here. You just go here, you pick a channel. And what I want to really kind of tune your mind and your eyes to on this is what you're going to see is we train 5 days a week. We are one of the few educators in all of Go Live that train 5 days a week, not including all the Zooms that we do. When you click on this here, it's going to bring you to our channel. And I want you to pay attention underneath here where it says recorded sessions. So when we do a session like we're doing right now, all of them are recorded and titled immediately within 3 minutes when the session is over. To the far right, see where it says search video? It is an open field. I can type in Cash Trap. So I can actually type in keywords for trainings that I'm looking to find. It could be trade entry reasons. It could be support and resistance, Bollinger Bands, all those kinds of things that people are searching for when they're trying to find a particular subject. You can actually type in that search bar. But the one I really want you to pay attention to is the favorite sessions. From the feedback that we get from all the customers, they tell us that, hey, these videos are really making a difference. They are organized, they're titled, and I promise you that if you watch these, it will drastically improve your trading results. Not only your mindset, but the results you're getting from your trading. That's why we star them and put them under the favorite video section, okay? So now what I want to do is I'm going to bring myself back up on camera and we're going to get right into the training. We always start with mindset first. We just do just a couple minutes on mindset and we go right into the training. And again, I want to remind you, this is to help you learn and master the skill of how to become a phenomenal trader. So I've got a trading partner and educator, Dr. Lee, someone who is formerly a doctor today who is a full-time trader. Like me, he's got a big family. And because he was a doctor for a number of years, I presented this to him as a way that he could eventually get out of that and really create time freedom because I'd already kind of created time freedom and traveled all around the world. And because he and I had been best friends for 19 years, met back in college, I said, you know, you really need to check this out. He kind of did it as a side hustle at first, was already putting in 60 to 80 hours a week, was doing it on the side. So the reason why I tell you that is he had a big family, was doing it on the side, and now got to the position where about 2 years ago, this is what he does. If he can do that, you can do that because it doesn't take a 4.0 GPA. It doesn't take a genius. What it does take is persistence. It takes patience. It takes discipline. It takes being steady, and eventually it's going to take off. With that, we'll welcome Dr. Lee, guys. Put some fire emojis inside the box for the doctor.
Excellent. Thank you so much, Brandon. It's great to be with you all today. Today is Tuesday, so we're still on the earlier side of the week, and we're going to be covering some market fundamentals that are very important, crucially important to your long-term trade success. So we'll be covering those in great detail with you today. And as Brandon mentioned, we're going to start out with some mindset things first, and then we'll jump into the details of talking about a few key topics that are very important for your trading. These topics also are in response to a number of the questions that we get on a regular basis in the chat section of Go Live. We're always looking at that. Sometimes we're not able to respond immediately to a lot of the questions that show up in that chat, but just know that we do refer back to them and we look at those questions. We're always looking for that information, that content that maybe isn't quite as clear to people, and so we want to be able to respond and provide that clarity. Our goal here is to help you master this skill. And so if you do have questions, feel free to email those directly to us or to post them in the chat. We do look back through those and we try to get to them in future sessions. So let's jump right into this. I'm going to share my screen with you and we'll get going. Excellent. So first of all, with regards to mindset, we always talk about this idea of learning how to fish. This is so crucially important. And sometimes people, they get a little tired of it. And it's like, you know, we've talked enough about fishing, but why do we keep in reinforcing this idea? As you are learning how to fish, we're helping you to create financial independence. You see, anybody can hand you a fish for that day, for that meal, and that'll feed you for that moment. Right? But what we really want to provide you with is something that's far greater. We want to provide you with the opportunity to obtain the skill and develop that financial independence where you don't need to rely on me giving you a signal or Brandon giving you a signal or any educator for that matter, but you can actually go out there and catch some fish on your own. We have many people in our organization who are now calling out live trades themselves with different groups of individuals within the team. And as they do so, to me, honestly, I get a great sense of satisfaction seeing their independence, seeing that strength, seeing that ability to do it. But I can also tell you that in the very beginning, with each of these individuals who are doing that today, many of them, when they were first starting out, there was a lot of complaints. There was a lot of pushback. They said, Dr. Lee, please, can't you just call out some live trades? Just give us the signals. Just give us what we want right now. And the harder thing to do was actually to kind of push back and say, you know what? I know it'll make you happy for the next 5 minutes to get a trade, but here's the reality. If I can give you something that you actually need, I recognize that I'm going to give you that independence long term. And so that's kind of the messaging for today. And to tie that in, I want to give you this quote by Tom Landry. Tom Landry was a famous Dallas Cowboys coach, one of the winningest coaches of all time. And he says this: a coach is someone who tells you what you don't want to hear, who has you see what you don't want to see, so that you can be who you have always known that you could be. You see, most people aspire to be successful. They want to become wealthy. They want to have good relationships. They want to have good fitness. But unless they can open up sometimes to the eyes of other people, sometimes this is a coach, a mentor, sometimes it could be a friend or a spouse. Ultimately, we have to open up and say, what am I doing and what am I not doing that's ultimately keeping me from the goals that I claim to desire? Because many of us would say, I want to be successful, but if we're not willing to do those steps to actually get there, then our true desire is not really to be successful. Okay, that's kind of the hard truth. So our goal is to give you that information that you truly need. To add to that, this additional thought, giving a fish provides a single meal, but it creates dependency. We see this oftentimes in governments and welfare programs, and I'm not condemning the existence of these type of assistance programs because they are useful at times. But interestingly enough, in societies, in governments, and in situations where there are these kind of dependency type programs, what we often see is that they don't get smaller, they actually grow. In other words, more and more people tend to get onto the programs. Why? Because it's kind of free food, it's free money, it's free whatever. And so we see that a little bit. And so within the I Am Mastery Academy, we try to provide both sides. You don't have to just rely on one or just never get any of those trade ideas, but we provide both. So you can get on sessions with Ness Velasquez, with D.L. Woods, with Matthew Thayer, with Millie Mills, with all these different educators who are providing trade ideas and giving some basic education on how to go about taking their trades. But ultimately, if you want to learn how to fish and you want to gain that independence, then that's what this program is all about, to teach you how to master the skill and to teach you how to fish so that we can provide you with a lifetime of meals and to create independence in your life. True happiness comes from independence. In the very early stages of the United States, Thomas Jefferson, he wrote what was called the Declaration of Independence. That declaration really was saying we are free. We are declaring our freedom and independence of the original 13 colonies of the United States from Great Britain at the time. Okay, so it didn't mean that Great Britain is always the enemy or something like that, but but rather that in each of our situations, in each of our lives, whether we're a child within a family, whether we're employed within a business, at some point, you need to have, in a sense, your own declaration of independence. You have to decide for yourself that you will break yourself from the dependency upon others. Doesn't mean you don't learn from people and so forth, but ultimately that you will seek that independence. And the only way to do that is to master the skill. And when that goes for any skill in life, if you want to have good relationships, you have to master the skills that are going to help you have better relationships. If you want to have health and fitness in your life, you have to develop the skills and the knowledge and the discipline in order to apply those principles that will ultimately help you to become a healthy and physically fit person. There's no shortcuts. You have to do that work. And so for this program, in our Master the Skill series, our goal is to help you become financially independent by obtaining the skill that will enable you to trade anytime you want, during any market session, anytime, night or day, whether you have access to Brandon and I or not. And so with that, today we're going to get into some powerful concepts that will help you do just that. So let's get right into this. So we talk all the time about price movement and how price moves in waves, and it's constantly going up and down. And the knowledge we need to obtain is, how do we identify which direction that price will go next? That's how we make our money in HFX. We also assign a time expiration. Once we've determined, based upon the evidence, which direction price is likely to go, it's always a likely, there's a certain probability, simply because it doesn't always go in that direction. You're not going to be right 100% of the time. And the good news is you don't need to be. But we seek to be right most of the time. And we also need to know, when do we get into trade, as well as the specific time expiration. In other words, when is that trade going to end? That is an important element of our overall trade decisions. Yesterday, we talked a bit about what moves price in the markets, and so we won't cover that so much today, but it's important to always remember that price moves up and down based upon a balance of buyers and sellers in the market. People who predict the price will go up, or people who predict the price will go down. And we want to trade primarily during times of higher volume and higher volatility. Volatility simply means that price is moving in a given direction. And that's what we want. When we place a call option predicting price will go up, we want price to move in that direction, right? So that's where volatility is on your side. And then our ultimate goal is to identify where those points of direction changes will occur, and that's where we want to take our trade. So today we're going to be talking about 3 key concepts to help improve our understanding of how to identify the different pivot points in the market. Now, yesterday we covered these basic price patterns, reversals, or the breakout and retest, and those are really the 2 core things that price does all the time, over and over again in the market. We can see that here just in a simple example. We'll even just kind of get rid of some of these indicators here. On Bitcoin, Bitcoin has been rising significantly over the last while. But no matter how fast it rises, or no matter how much it moves, ultimately it's following these same breakout and retest patterns over and over and over again. And so just real quickly, I'm just going to throw in a few lines to help illustrate where some of these pivot points are. Okay, each time that price changes directions and then ultimately breaks out beyond that pivot point, that we call that a breakout. And so here we have a number of breakouts to the upside. It comes back down to retest to those previous zones, and then it continues in its given direction. And so as we identify some of these key pivot levels, we can see what price will likely do next. Okay. All right, so in this simple example with Bitcoin here, we'll use this path tool to just kind of illustrate what's going on here. So price was kind of moving sideways for a bit, and then price finally broke out to the upside, retest to this previous pivot point here, broke out again, retest, breaks out again, retest. Where is it retesting to? This previous pivot point here. Breakout, retest, breakout, retest. We had a little bit of lateralization, a consolidation phase, which is normal. Most phases don't stay in trending time forever or in consolidation forever. So we're going to see some transition times. So here price went into a little bit of a consolidation phase, slight bit of a downtrend there for a moment based on this hourly time frame chart, consolidated, and then eventually we get the breakout, retest, and then price comes up again, consolidates for a bit until we finally get a breakout above this pivot point here, retest, and then price pushes up. And so again, these patterns occur over and over and over again. And so you can simply apply a basic price action understanding of a breakout and retest in Cash Trap, and then look for arrows to confirm the trade in that direction. So you look for a breakout, wait for it to retest, get the arrow in the direction of the breakout, and you've got a solid trade opportunity. And so that's a very simplistic way of looking at the markets. And so it's very important to understand that we don't have to overcomplicate this in order to be a good, successful trader. Sometimes when people consider certain professions, such as medicine, such as engineering, it's very complex. There are literally hundreds of thousands of pieces of information that you have to be taking into account, calculations, knowledge of anatomy, physiology, pharmacology, etc., in order to understand how to execute that specific profession. Well, luckily, when it comes to trading, you don't have to be a professional economist. You don't have to be a statistician. You don't have to be an actuarian. You don't have to have a doctoral degree in any of these areas in order to be a good trader. If you can look at a few basic visual patterns without even knowing any of the data that's going on with those patterns, right, behind the price, what's causing price to move up, you could say, I have no clue why Bitcoin's going up, but I keep winning on all these call options because I can read the price action behavior. You see, winning in trading is as simple as looking at visual patterns and then looking for some specific confirmations, all of which can be confirmed visually. You don't have to read any data. You can say, I'm not good with numbers. You don't need to be good with numbers. For me, myself, I almost never look at the price. I don't care about price, because whether this price right now, currently Bitcoin's at $46,759, it could say 2,000. It wouldn't matter to me. I'm simply looking at price action behaviors. The price does not matter. The price, in fact, can often be an inhibitor to people's mindset, because what they say in their mind is, oh, Bitcoin's at 48,000. It can't go any higher. Oh, now it's at 50,000. It can't go any higher. Surely it can't go any higher. And they start to mess with their own emotions and begin to reason emotionally on why the price either can't go any higher, can't go any lower, or whatnot. And the truth of the matter is that the price can go anywhere it wants. It can go as low as 0, and it can go as high as infinity. And so anything in between the two is a possibility. And so rather than placing artificial psychological limitations on what price will do based on what we think of the price, ultimately, we just simply need to look at the actual price patterns, and then we can make our future price direction predictions with a high degree of accuracy and win rate. So as we look at this, the question then arises is, how do we identify these different pivot points so that we can see in real time where these pivots are taking place, when the breakouts are taking place? And so I want to talk about a concept that we've covered in the past, but it's important to review, and that is of flat tops and flat bottoms. So this is the first point we'll be discussing today. So within price action, price is going either in the upward or downward direction, and anytime it changes directions, it creates these flat tops and flat bottoms. And when we refer to a flat top or flat bottom, what we're talking about is the body of the candle. You'll see these wicks, the black lines that protrude either out of the top of the candle bodies or out of the bottom. And for the sake of identifying these levels, the wicks and the shapes of the wicks, the length of the wicks, or when a wick is not even there at all, does not matter, for the sake of just simply identifying these flat tops and flat bottoms. So in this first example here up top, you'll note that the top of the green candle came up to this point. And when we see a green candle or a blue candle in Go Liberty or in Cash Trap, a blue candle or a green candle simply means that price started down here at the bottom of the body and that it closed at the top. It was overall an upward moving candle. And so when that candle closes on whatever time frame chart you're looking at, and then the new candle opens, it opens at the same level. And then in this particular example, the candle went down, leaving us with a red candle. That means the price opened here at the top of the body and it closed at the bottom. And so this flat top, you'll note that the top of the green candle and the top of the red candle are at the same level. So we refer to that as a flat top. If you compare that to the bottom of this green candle here and the bottom of this red candle, they're not at the same location. So that would not be considered to be a flat bottom. But next, as this red candle came down, another green candle formed and it went back up. And so as it did so, it gave us a new flat bottom. In other words, the red candle first and the green candle afterwards are both at the same level, and that gives us a flat bottom. What does this ultimately mean? These flat tops and flat bottoms are showing us where the price levels are at which price changed directions. Okay, yes, price did get up to wherever the wicks may have gone, but ultimately the closed price direction change occurred at the flat top or the flat bottom. And I'll show you on the live chart kind of how we can begin to keep track of this. But this is a very useful thing to identify as you're looking at price patterning and so forth, because this can give you a clue as to where the pivot points are. When a person looks at a live chart and they say, well, where are the pivot points? Where is price responding to? Where do I need to look for a trade opportunity? Identifying these flat tops and flat bottoms can become very useful. And so we'll jump into some very minutia detail examples here on gold on the 1 minute time frame chart. People often ask, why do we look at the 1 minute chart versus 5 minute or whatnot? The primary reason why I look at the 1 minute chart and use it for illustration purposes is because these candles form very quickly, and so it shows us lots of examples. And I really want that repetition element to show you how this plays out. Whereas higher time frame charts, the same principles apply, but it takes a lot longer for the patterns to play out and to show up if we're having to wait an entire day or multiple hours for each candle to form. Whereas on a 1 minute chart, all we're waiting for is literally 1 minute for a new candle to form. So we see the pattern repeating itself over and over and over again as we're looking at that. So flat tops and flat bottoms. So let's just take a look at some of this recent price activity here. Excuse me. Apologize for that, just inhaled in the wrong pipe there. Okay, so flat tops and flat bottoms. So what I'm going to do is we're going to take our little brush tool and we're just going to start marking these up. And here we're looking at current price activity. You can see the live candle here on the right side of our screen. And so let's just kind of go through some of this recent price activity and just simply mark up the flat tops and flat bottoms. And you'll begin to see how these start to give you a clue for where price is going to respond. So here on our left side of our screen, we see our first flat bottom. You can see this red candle came down and immediately this green candle goes up. What that means, again, is that price went down, and at that level, it turned around and went back up. Yes, it did come all the way down to the bottom of this wick here, and that's okay. This becomes our zone. We can consider the space between the flat bottom, or the flat top, if you will, and then the end of the wick kind of as that zone or area in which you can look for price to come to in the event of a breakout and retest. So here we also have a flat top. So green candle came up, and then we saw a red candle right afterwards. And let me zoom in on this to make sure that you can see this clearly. So hopefully that provides a little bit of clarity on the flat top and flat bottom on those two examples. Price came down. We have all these red candles. We have this green candle that shoots up. So now we have a new flat bottom. Price immediately drops after that. We have a new flat top there. Here's another flat bottom. No surprise that it's right at the same basic location. Came all the way up here. Here's a new flat top, flat bottom. And again, this particular exercise is something that you want to do just to simply begin to see where price is pivoting. The better you can get at identifying where price is pivoting, the better you'll be able to filter through a lot of the arrows that you see in Cash Trap when it's giving you up and down arrows, when you're identifying trend direction and so forth. If you can start to identify where some of these recent pivots are, all of a sudden you can begin to build a framework of where price will likely respond next, okay? And be able to filter through some of those arrows. All right, so here's some more flat tops, flat bottoms. Here's another flat top. Price came down to this level, flat bottom. Here's a flat top. And so I would encourage you to simply go on your chart, and you can do this directly in Go Liberty. You can do this directly in Cash Trap. Just grab the brush tool over here on the left side of your screen, and you can literally just start drawing those lines on here. You can choose whatever color that you want. You can increase the thickness if you need to see it better. And literally just start drawing some lines. You say, okay, here's a flat top, here's a flat bottom, here's a flat top here, here's another flat top here, here's another flat top, and another flat top. So here we've got a bunch of flat tops right all at the same level. In Pickpocket in particular, it kind of does this for you with this top and bottom black line. It shows you kind of some of the most recent flat tops and flat bottoms. But again, so what does this all mean? When we're drawing these lines, ultimately, what do these mean? Well, here's where it becomes useful. As you're identifying where price will likely change directions, you want to then utilize a flat top and flat bottom as an area of potential launch pad. Now, a launch pad is a concept where if you think about a rocket ship or a spaceship or something like that, they first put the rocket on top of a platform. That platform is the launch pad that will provide some support and a solid base from which price can respond, or from which the rocket can respond, okay? And so if we just start here on our left side with these flat tops and flat bottoms, again, we see that price went down, pivoted up, and we have a breakout to the downside, okay? Where did it break out from? This previous flat bottom, okay? So where do we expect price to come back up to? Generally speaking, it's into this zone. So you can grab your rectangle tool and you can say, okay, if price comes into this zone here between the wick and the body, it gives you kind of a little bit of flexibility, right? And if you can wait for a confirmation candle if you want, or you can just enter preemptively. People do a little bit of both at different times. But so if price breaks out, and if price comes back up to this level, and if we get a confirmation candle, which would be one candle in the direction of the breakout, then we could take the trade. So if we look at this example, this would be our confirmation candle here. Price did, in fact, come back into that zone. You could have entered on this first candle that pushed into that zone if you were preempting it. If you wait for a confirmation candle, you'd enter at the base of this red candle, and you would enter for 3 candles. 1, 2, 3. Price would close at this level, and you would win that trade. So all of a sudden, we not only had a solid trade opportunity that would have won, but we knew in advance where to look. And this is where it's very, very important. So price broke out to the downside, but where we were looking to take the trade was in this zone. Why? Because we identified this flat bottom, that was the most recent one that price broke out from. And that's a very important concept as well, is always look for the most recent one. There may be some coinciding or some synergy between them. For example, we have, grab my brush tool, this flat bottom here, price came up, we have now a flat top, we have another flat top here, we had another flat bottom, we have another flat bottom here, and so we have multiple responses in that zone, right? So there's no question there is some overall resistance in that area. Price is definitely responding to it. But when it comes to making your future price direction prediction, you always want to look at the most recent pivot from which price has broken out from. So this one here, once price has broken out from that, we're then looking for a put option in this zone, and you could say in the event of a confirmation candle, which we get here, and our trade would be entered at the close of that candle, or like I said, you could preempt that as well. So once that has taken place, at that point, then we're going to wait for price to create new pivots and new breakouts. So price pushes to the downside, price holds this level here, eventually breaks above this level, okay? But it also showed a new flat top. So here, price comes up, down temporarily, and forms this new flat top. So now essentially what we're saying is the new scenario is if price breaks above that, and if price comes back down to this zone here, then we can look to take the trade for a call option. So even though, yes, there is some coinciding between these other points of resistance, how prices responded in the past, and that might provide some further evidence to suggest that price would go up in the event of an upward breakout. Really what we're suggesting is that for our specific and immediate trade opportunity, we're actually looking more specifically at the most recent breakout level, the most recent flat top or flat bottom. So here, if we let's reset some of our drawing tools here just so this doesn't get too busy. And we'll do this. Grab our rectangle tool here. So this is our zone. Why? Because here's our flat top. And so basically we have a flat bottom down here. We have a flat top up here. So price, as we talked about the other day, can really only do one of two things. It's either going to reverse off of one of those levels, or it'll break out either above or below one of those two levels. And then we'll look for a retest. In this case, price immediately broke out to the upside. And so we're looking for price to come back into this zone and then give us a confirmation candle suggesting that the price would continue to go in the upward direction. So price broke up, comes down. This candle, which happens to be the confirmation candle as well, touches into that zone, again, the area between the body and the end of the wicks, and then we get a confirmation candle. Take that trade for 3 candles as a 3-candle rule. And again, people can take trades for different amounts of time. We're not saying you have to do 3 minutes, but as a starting point, if you need some guidance, that's a good place to start. It gives you enough time for frankly, for some error, right? You would have won in the first candle, but waiting for the third candle enabled price to go a lot further after our entry point, and we would have won that call option trade. So as price breaks out above this flat top, we can expect price to come back into this new zone. So let's grab our little zone here, drag it above this level here. Okay, so there's our new zone based upon this new flat top. And so we're expecting that price can push above that level. Now, we already won this specific trade, but again, we're seeing this price, it retested here, but now we're breaking out to the upside. So we're expecting that price could come back into this zone and then continue in the upward direction. But this is where confirmation candles become very useful. If we preempted this and we just entered immediately as price got into this zone, you would lose that trade. If you wait for a confirmation candle, you never would have gotten in the trade in the first place. Okay, where the purpose of a confirmation candle is to help provide some evidence that price is actually going to go in the direction of the breakout. Kind of gives you that final, in a sense, warm fuzzy. So here we didn't get a confirmation candle. Confirmation candle would have been one green candle in the upward direction in this zone, and we didn't get it. So we don't take that trade. So this trade is no more. As time goes on, we then form new flat tops and flat bottoms. Now, why are these important? Because these are the areas where price is changing direction. So it gives you a clue for where the market, in essence, is telling you where price will respond to. All right, so we have our flat bottom down here, okay? And we have our flat top up here. So we can create our little zone, both below as well as above. And we say, well, we'll just wait for a breakout. We'll look for price to respond or either push out above or below this level, and then we'll look for a confirmation candle upon a retest. So here, price pushes up into this zone. Here we get our confirmation candle, this red candle here. Why? Because our original breakout direction is to the downside. And note how the pivot point that we're considering here is this one. Okay, this pivot point here. Why? Because that's the most recent. This will help keep you in tune with what price is currently doing. And again, it doesn't mean that you'll never see it match up and blend with other previous pivot points in the past. But the most important one is the most recent. That's the one that price will likely respond to. All right, so price pushes up to this level, and we would expect that if we get a confirmation candle, that price will push to the downside. And that becomes the reasoning for our entry. So here we would take a trade at the close of this candle here. And then even though this one is quite close, if you do this for 3 candles, price closes slightly below our entry point. On these type of trades, I often will do a fixed time. That way I know that my trade results will actually match up with what the candles do. Because sometimes in those last few seconds of a candle closing, it may be close, but I want to know and I want to be able to back test and see, is this going to work out or not? Does that make sense? So ultimately, we have another winning trade, just even in those. So next, again, we just keep following in line with what price is doing next. So we have another flat top here, another flat bottom here, and we're waiting for price to simply break out to one side or the other, unless future flat tops and flat bottoms are created. We have another flat top that was formed here, so this becomes the new area of interest, not this one. Okay, so we're no longer considering that one. Another flat top was created here, and another flat bottom was created here and there. So here is actually our most recent flat top and flat bottom. And so that becomes our area of interest unless new ones are formed. And so this is where we can begin to look for future opportunities. So price breaks to the upside, and you'll note that we don't really get a retest. That's okay. We still could have identified that, hey, this was our most recent flat top, and that's where we would be looking for a trade setup. Knowing where to look is half the battle of identifying good trade opportunities. And so don't worry about it. If price just pushes on, that's okay. That's just new movement. Look for the new pivots, and then you can look for future trade opportunities. All right, so price comes up to this new level up here. We have a new flat top, new flat bottom. Price breaks above that. if price comes back down to this level. Normally I would like multiple candles to come back down, but occasionally it'll come straight back down, and then you'll get this confirmation candle, which would be right here. Our entry zone, just to put this on here, would be, it would look like this, okay? A little skinnier than that. Basically, again, from the candle body to the end of the wick on the flat top, or the end of the wick on the flat bottom. So this other one would look like this. Okay, so you could drag this down to the bottom of this wick here, and that's your entry zone if price were to break out to the downside. So in this case, price comes down to this level. Normally, I don't take these trades. I'll be straight with you. I don't often take these trades where one candle immediately comes back to it. They still can win. They do often, but I often don't take those because I like to see more of a solid breakout. I want to see price really stay beyond. So if price has moved in a given direction, it pivots. I want to see price stay above this previous pivot point for a bit before coming back down to it, and then looking for that confirmation that price will continue to go in the upward direction. But that breakout up here, the reason why I look for that is because when you see one candle immediately drop straight back down, even though, yes, that is a retest, there's no question about it, that is a retest. The challenge with it is that it's sometimes what we refer to as kind of a fake out. It's where price pushes up just to kind of take out some liquidity and then immediately plummets back in the opposite direction. And we see that sometimes in expansion phases. And so a way we avoid those, getting caught up in those particular situations, is we definitely wait for a confirmation candle, but we can also look for price to kind of stay above that previous pivot point before coming back down to the retest. All right. And again, it doesn't guarantee that you'll win every trade, but it helps to filter through some of them for sure. All right. So let's see here. So price kind of went sideways for a bit. And again, when I'm looking for a breakout, I really want to see price stay above an area. So for example, this flat top here, price kind of pushed up a little bit, but really didn't, we don't get any kind of real arch formation. I would normally want to see this push up and then come back down. Here, it just kind of pushes down almost immediately from just barely peeking its head up above this level. So again, I don't consider that a breakout. And if we were to add a Bollinger Band, we would likely see some crossover. In this case, it doesn't fully cross over until over here. But this is often kind of an early sign of a bit of consolidation. If we're not pushing significantly above a previous pivot point, then you're likely, the market is likely kind of going flat. And that's essentially what we see here by the price just sort of just kind of going sideways for a bit, okay? So, but we do continue to keep track of these flat tops and flat bottoms. So we're keeping an eye on them. If the price immediately comes right back to it, again, I don't consider that a breakout. I want to see price really push out and stay beyond that level. So here's a good example of the contrasting difference. These are all very short-term pivots where price pushes out one candle above this previous pivot point here, this flat top, but price immediately comes right back down to it. So I'm not taking that trade. So that's a classic example when I would not take those particular trades. But here, as price pushes down, note how many candles push out below this previous flat bottom, and it's actually this one here. All right, so let's create our zone, and again, just follow our rules. Anytime you want to become a professional, or an expert master trader, you want to be able to follow some rules. So we would have kind of an entry area there, and this one would be actually quite narrow because the wicks don't push down that far, and I'll delete some of this drawing so it's not confusing to you. All right, so that's basically the sell zone or the put option zone that we would look for if we get a breakout to the downside. If we had a breakout to the upside, we would put that up here at our flat top, come up to the end of the wicks, which would be right there. Again, a very narrow zone, which is okay. This just makes it a little bit more precise. Price comes up to this area, so we preemptively say if price breaks out to the downside, or if price breaks up to the upside, and then price comes back to that flat top or flat bottom into that zone, and we get a confirmation candle, we can take the trade for 3 candles. So once again, here we get our confirmation candle after price is broken out. Look at how many candles, not just one little peeking out above and then immediately turning around. This goes 1, 2, 3, 4, 5, 6, 7 candles were beyond this previous flat bottom. That's what I mean by a breakout, is we're saying, hey, from this point here, below this this pivot, price broke out to the downside and then came up to it. And that's what validates this as a breakout. And that's why we can expect price to continue in the downward direction, because price has shown the strength or the downward momentum that it can, in fact, push to the downside in the first place and stay down there, not just immediately reverse back, okay? So that will help keep you out of some really tight consolidation zones and really identify those times where price is going to move in your direction. Again, we're predicting price direction within a given amount of time, so we need the price to move in our direction, not tomorrow, but immediately, within the next few minutes or the next few candles at least. And so at this point, that becomes our entry. Our exact location entry is at the base of this candle. Now you may ask, well, why do we enter at the close of a candle as opposed to right up here? Because the fact that this candle turned into a red candle at our known previous flat bottom area after an identifiable breakout gives us the confirmation that the price is actually respecting this level. So that is the evidence. We talk all the time about evidence. This gives us the final confirmation, because yes, in hindsight, we can say, well, it would have been better to enter up here than down here, right? But it's when you're looking at future price activity, the reality is that these 3 green candles could have turned into 10 green candles, and it could have just pushed right on through. We never would have had that confirmation in the first place. And so waiting for that confirmation candle can be very helpful, because you get to see what the market is going to do before you enter the trade. It's a phenomenal overall trade strategy, will really help you to filter through those trade opportunities that are going to improve, basically filter out some of the losing trades, but also get you in very confidently in some of the winning trades. So in this particular trade, we're in for 3 candles, 1, 2, 3. Price closes at the base of this red candle here, and that would be a winning trade. I also want to emphasize once again that we're using current price activity. All of this is right here from this morning. We're going candle by candle. We're not skipping scenarios. We're going each step of the way. And then the reason for that is because I want you to have the confidence in the strategy and to be able to replicate the results that we're talking about here. So once again, we just keep track of these. Price is pushing up, but it doesn't break above this flat top. So we're not looking for a trade here. Kind of comes back down a little bit, pushes up once again, immediately comes back down. So is this a breakout? No, it is not. So we're not looking for a call option in this particular case. Why? Because we don't see that nice breakout like you see in this scenario here. This is a nice true breakout. This is a fake out, pushing up, taking out some liquidity that's in the market in that zone, and then immediately pushing down in the opposite direction. And that's where you see the primary move take place. This is a classic, it's called a institutional theory pattern, and it's very effective. It's good to be aware of it. This is classic expansion phase type behavior, and that's why we don't take those trades. We don't take these single candle breakouts, single candle returns. That's not the kind of breakout that I like to take. All right, so let's reset our chart here and look at some future price activity. All right, so here we're at the current live candle. Do we have any further trade opportunities since this last fake out up here? We had a flat bottom right here. Price broke out to the downside, and it has not given us a retest to this level yet. So we do not have an opportunity there, because we had a potential scenario. The thought pattern, people ask us all the time, what is your thought pattern? How do you go about looking for a new trade setup? This is exactly what I do. Let me show you right here. So if I came upon this chart, I always like to look at the last number of candles to kind of orient myself with what price is currently doing. I want to see where is price moving right now. And so in this particular case, if we were looking for a trade after this breakout to the downside, it would look like this. So we could take our rectangle tool here, say here's our most recent flat bottom, which includes this red candle and this green candle here. In case there's any confusion on that, that's what we're talking about. This green candle here, even though it's small, and this red candle, that's our flat bottom. Price pushes up one candle, immediately pushes back down through. So this becomes a more valid breakout. Look at all these red candles forming. So if price were to come back up into this zone, and then we got a confirmation candle, we would have a solid trade opportunity. Now, it's not to say that there aren't other reasons to take trades in this movement, but as far as a simple breakout and retest, if you're looking for those easily identifiable trade opportunities within Cash Trap or in Go Liberty, you want to be able to keep track of where some of these flat tops and bottoms are, because that can give you a location at which you want to look for potential setup. So once again, we identify this as a potential location. Did the market give it to us? No, it did not, and that's okay. So in other words, we expected that, or we created our if scenario saying, if the price breaks out, and if price retested this area, and if we get a confirmation candle, which would have been a red candle in this particular case, then we could take the trade for 3 candles. That's the thought pattern. That's how we would go about making that decision. So price continued to push down, and that's okay. It didn't give us that opportunity. Totally okay. And then we simply move on to the most recent pivots. So when I first come into the market and I want to orient myself, I immediately start to look for flat tops and flat bottoms. So here I would say, all right, so here is our most recent flat top, okay, where price had come up and then it changed directions. Here, and we'll create another one, drag this down. Here's our most recent flat bottom. I squish this in because, again, we're just going to the wicks to the bodies. All right, that's how you can kind of create a zone. This will make your life easier, so you don't have to be super, super precise on it, exactly what is the level. And so from this point here, we're saying if price breaks out either above or below either of these zones, we're then expecting price to come back to it. So if price breaks out to the downside and price stays below it for a bit, we're expecting that it will likely come to this level as long as there's no new flat bottoms that are formed after this. If we get a new flat bottom, then we're considering that one and not this one. We always want to stick with the most recent flat top and flat bottom. For example, we just got a new flat top here. So this one was our previous, and so now we're saying, nope, this one is our new flat top, okay? And we can squish in our zone between the body and the top of the wick, and again, that becomes our zone of interest. And even this one, shrink that down to go from the body. So now it looks like what's happening here. Potentially, it looks like we might be developing a breakout to the downside. So what do we want to see? Again, it's always good to have these if scenarios so that you're training your mind to see what the market can do and is doing, and you're not selling yourself on why to get in. Selling yourself typically means emotional. Oh, you like those shoes, you'll look good in those shoes, everybody's going to like you, you've got the money or you've got the available credit on that card, boy, you want those shoes, right? Sometimes we sell ourselves on a trade because we want to get in a trade. Because when you're watching each candle form, oh my gosh, it can seem like an eternity. And I'll be the first one to admit that sometimes it's like, can this please just give me a setup already, right? Emotionally, we think that way, but really that's not a good place to be in. That's not a good mindset to have. We want emotion to go out the door. We want to say, if the price breaks out, if I see multiple candles here and then it comes up to this level and there's no new other flat bottoms that form between now and then I want to look at this area of interest. So if this green candle immediately comes right back to this level, okay, or even pushes beyond, is that a breakout? No, it is not, right? It's a push down to this level, but we're likely a little bit of consolidation here. So if it immediately comes back into the zone, we're not considering this a breakout. More of, you could call it a fake out. It's just a type of market movement. No one's really trying to manipulate anything. It's just how the market moves. But from a definition standpoint, we want to see multiple candles stay out here, price coming back to that level without creating any new flat bottoms over here. And that's where we're looking to enter in a new trade opportunity. So that's the if scenario on the downside. The other scenario is if price breaks out above this previous flat top, we're expecting price to stay above it, work its way back to it. As long as it comes into this zone and gives us a confirmation candle, then we could take that trade. And in all of the ones that we looked at this morning, we didn't have a single loss following those exact rules. And again, we did not skip any candles. I think that's important to note. Okay, just in following even all this most recent price activity for the last roughly 2, 3, no, what is that? 9 to, that's about 10, basically 10 o'clock to noon. So the last 2 hours worth of market movement, we would not have a single loss simply following that price action patterning to our trade decisions, okay? Now, how do we then apply this into Cash Trap or into Go Liberty? Well, the beautiful thing about Cash Trap is it gives us these arrows. This is a very comforting thing, especially when you're new, is you can see, hey, it's saying to place a call option here. but you still want to ask yourself the question of, is this an arrow I want to take? And to make your life simple, here's what you can do. And to illustrate this, I'm just going to squish down a few of these indicators here so that you can see this a little bit more clearly. So right now, here we're looking at NZD USD. What we can do is we can look at these candles and say, where are our most recent flat tops and flat bottoms? Well, as an area of interest, we can see that we had a flat bottom here where price came down and immediately went back up. It basically repeated at that level. So that's our most recent one. So our one of interest is right here. We're currently below a flat bottom. You can see we got 4 red candles in a row that have stayed below. That's a good sign. So if price continues to move down a little bit and then works its way back up to this level where this flat bottom is, and then gives you a confirmation candle, we've got a solid trade setup. So once again, we create our if scenario, and then what are we looking for? We're looking for price we're looking for Cash-Strap to then say, give us a put opportunity, right? Look for a red arrow that says put option at that level after the breakout and retest. Okay, that's what we're looking for. And again, you can wait for even a confirmation candle if you'd like as well, which will help keep you out of certain losing trades. But what this does is it keeps you on the side of momentum. When you're looking at a rocket taking off of a platform, you want to know which direction that rocket is pointing, right? And when it comes to market analysis and identifying price movement, that's essentially what we're saying. We're saying that if price breaks beyond a given level, which side is the actual launch pad? And these flat tops and flat bottoms are those specific areas. Now, because of time, we didn't have time to get to our kind of second and third areas of discussion, which are fractals, which are another way that we can help to identify these areas of support and resistance, as well as gapping. And so we're going to cover those topics in our discussion tomorrow. But for today, my encouragement to you is to practice this concept. You literally don't even need any indicators on your chart to just begin this. Go onto your chart. You can even do this actually in Go Liberty. You can come down to the trash can here. So if I come to the trash can and I say remove indicators, boom. It removes the indicators just temporarily. They'll come back on if you refresh your screen. But you can remove the indicators and you can just sit here and say, you know what, I'm going to draw all my flat tops and flat bottoms. And I want to look for where price is changing direction. And I want to start just following this pattern. Like this is a perfect example. See how this blue candle immediately comes up and then immediately drops. Even though it went above this flat top here, it didn't stay above. This one here, it went down but immediately came right back in. So both this example here and this example here are kind of fake outs, you could say. All right, we want to see a much more solid, true breakout in a retest scenario. And anyway, so as you practice that, you'll become more in tune with what price is actually doing. Look for the most recent pivot point. That's the area of interest that you want to look at before you take a trade. You don't want to be considering pivot points or these flat tops and flat bottoms. Does this one here is a valid flat bottom, but does it matter to what price is doing over here? No, it does not. This is completely irrelevant. You don't even want to look at those. Just look at the most recent ones. Here we have a flat top, got a new flat bottom right there. So there's our areas of interest. So create your if scenarios, drag your zones. You can take this zone, move it down to the most recent one, and start to make your decisions based on that. Okay. And again, make sure you're looking at true breakouts and not just one candle breakouts. That's one of the key distinguishing differences too. So with that, I'm going to turn the time back over to Brandon. We really appreciate all of you being on our call today. If you have people on your team who are not part of these calls, they are not plugged in and they're not getting the help and the guidance that they need in order to be successful with this. So if you have somebody on your team and you're hearing from them, they say, I just don't know what I'm doing. I got on Matthew Thayer's session and I lost a trade, or I got this or that and the other. The truth is many of those individuals are not plugged in. So get them plugged into these sessions. We teach everything that you need to know in order to become successful with this. And there's no reason why you can't succeed. Make sure they're plugged in. But thanks for being on with us today. We'll look forward to seeing you tomorrow. Brandon, I'll turn the time back over to you.
Awesome. Well, hopefully you guys got tremendous value out of that. We appreciate you and for your consistency for jumping on here. We know that there's certain individuals who are literally on here 5 days a week. So thank you to you for those who keep hopping on. the Ron Glovers of the world and others that we see on here literally 5 days a week, team members who are continuing to learn. They're continuing to learn how to fish and really grab the fishing pole and be successful as a trader. And that, at the end of the day, it's all about taking ownership of your life, ownership of the business, ownership of the trading, right? Taking personal responsibility. We can't blame Matt. We can't blame Ness. We can't blame Evan and all these other people saying, well, they lost me a trade. No, you lost you a trade. And as Eric Thomas would say, you owe you an explanation, right? Take ownership of your life. Take ownership of the trading. And as you do that, you'll become successful. Guys, with that, we'll go ahead and end with some music. We appreciate you. Have an amazing Tuesday.